strategies, but we need to also make some adjustments to the short term so that we recover faster. In terms of the long-term strategies, the African Development Bank has what we call the high fives, and I think it will resonate well with all of you. Essentially, the first three high fives are to power, feed, and industrialize Africa. Bought commodities mostly in their raw form, no value addition. So I'll share really an integrated project, as a good example of what we're trying to do as the African Development Bank, what we're trying to support. It's not infrastructure, as a means in itself or by itself, but it's really infrastructure that connects economic activity, leads to inclusion, jobs created, higher incomes, etc. So a simple example would be we produce a lot of cotton in the Sahel region. We also have a lot of cattle in the Sahel region. We would like to look at cotton to textile value chains. We would like to look at livestock to leather products. And if you can imagine creating industrial parks across Africa, around really the centers of the sources of these commodities, we would like to set up, we would like to really help set up those industrial special economic zones where we can really process, cotton to textiles and livestock to leather. So a good example of the kind of project that we're interested in would be really what Sanjeev and the Africa Finance Corporation, partnering with Olam, are doing in terms of, industrialization projects. And they're looking at the two value chains I talked about. They're also looking at forestry to wood products, for exports to the Americas and also Europe as well. And the company, Sanjeev, can I mention? It's Arise 2P, yes? And those are the sorts of vehicles.
You said it for me than I did, yeah.
Okay. So those are the sorts of vehicles that we're actually looking to support, So it's really integrated. It's got the agribusiness value chain, it's got the infrastructure component, because if we don't figure out the logistics evacuation of the ultimate products, whether it's to the ports or it's really to other African countries, and given that we don't have, a single networked rail infrastructure for all of Africa, we have to rely more on roads as well as the port infrastructure, even for intra-Africa, trade, but definitely for trade with the rest of the world. These are the sorts of things we're going to look at. But we also realize that our partners look at segments, right? So while we would have the AFC and the Olams, looking at it overall, we also need to look at partnerships with the likes of Shailesh and other companies that are looking really at the segments. So let me dovetail now to the interesting conversation that I came into between Shailesh and Sanjeev. And interestingly enough, I agree with both of you. So Shailesh, actually, the Africa 50, I don't know if you've heard of Africa 50, but Africa 50 and AFDB are working together on infrastructure asset recycling. So we're looking really for brownfield infrastructure across Africa, that we can help monetize and bring in pension funds, bring in, strategic operators like yourselves, not just to really manage the existing operation, but to both optimize and expand the existing operations. But one of the realities that we've experienced is the number of such brownfield opportunities that would be attractive to the likes of yourself is not really as deep as we would have thought from the beginning, but there are still opportunities, okay? So now I shift to what I agree with Sanjeev on. Not to be philosophical, but to rather say that governments simply do not have the fiscal space to fund 80% of the infrastructure needs. Whatever monies they have to prioritize infrastructure now. They can't have the wish list, but they have to leverage those monies across more infrastructure projects, especially if they're going to have infrastructure-led recovery. As a result, we have to look at PPPs. We have to look at project development. So as Sanjeev said, AFC, in its original plans, would have been looking at financing bankable projects. But the lack of bankable projects is part of the reason why AFC has gone more upstream, and it's also part of the reason that we created a separate institution called Africa 50 to focus really on infrastructure project development. So we've got to really get involved in terms of private sector minds and private sector operators. And so, for example, Africa 50 is deliberately, Africa 50 and the AFCs of the world are deliberately developing projects that would either be PPPs or pure private concessions. And so infrastructure companies would have to also look to come in a lot earlier than the refinancing phase that you spoke about. But of course, the refinancing phase is more tailored towards, the pension funds and some types of strategic operators. So we understand that different types of institutions would play really at different points. Let me stop there, Dashan. Thank you.
Thanks a lot, Solomon. And I think there's like everything, the world's not perfectly black or white, and there's different shades of gray here. But before I come back to that topic, and it is very interesting, I want to talk to Sanjeev Agarwal here, who actually represents a power transmission powerhouse called KEC International. That's the top list of your high fives. They've created an edge in successful execution of power transmission projects in India. They have some presence on the ground in Africa as well. Sanjeev, how do you see your experience in Africa and moving forward from there?
Okay, good afternoon, Africa, and good afternoon to all my panelists. I was waiting patiently hearing the good thoughts about Africa. Look, this continent and countries in the continent have always amazed us. We have been in this continent for the last 2 decades. You rightly said our primary job in this in the countries are transmission and substation. We must have done more than 8,000 kilometers of transmission line in different countries, several substations, and as we speak, it's almost 2,000 further transmission lines which are in operation. I want to talk about the core here, the power. Where the panelists talked about it. That's core. Interesting part in this discussion, and I will keep it short. Just to give you some data point, 600 million people do not have access to electricity. 600 million people do not have an access to the electricity. There are countries in this continent like Ghana, Rwanda, Kenya, Senegal, and Ethiopia who have been investing heavily into the plan of making reliable, affordable power to reach to everyone. There is a potential of almost $80 billion. If I'm talking about companies who are interested to work in Africa, $80 billion worth of investment, which will go in terms of creating a reliable electricity pool for everyone. This comes out to something like $3 to $4 billion each year. Will I not be interested? I'm sure anyone who is looking at this great market, a growing market, would be more than interested to be there. And thanks to India Exim, thanks to the financial institutions like AFBDs and AFCs, who has been helping the companies around the globe to come in and invest in the continent. And Darshan, I'm sure the same is for road and railways. As one of the panelists said, when you look around the continent, you don't see a uniformity, which should have been there. So when it comes to core infra, this continent and the countries in the continent provides you enough ground, enough growth to work in, and work hand in hand with the local companies, as well as be part of something to say as a growth into this continent. Let me also tell you, most of our workforce that we employ comes from the countries, local countries. So the project managers the contract managers, the safety guys. I mean, you don't have a dearth of talent here. You will find these people, who understands the job, who are willing to work with you, to give a better future for the population. So as I said, amazing country, amazing continent, and I love to be there. Every time I get an opportunity, I jump into a plane and be there. But unfortunately, the COVID has not helped any one of us. Most of us has been sitting in our offices or in a house since March, waiting for the things to happen, and we can be back there. Having said that, let me also tell you one of our experience, which we think should be looked at to make things different for this continent. You will be surprised. 80% of the project, which comes into a stage of feasibility, drops out because they do not see a right techno-commercial plan. And maybe our experiences, this is happening because we do not have enough knowledge on the ground in terms of how to create a bankable project. So the suggestion that I would like to put it forward to the panelists and to the people who are hearing us, probably it would be good if we can create a panel of eminent people who have worked in infra, and it could be coming in from India. Sailesh talk about how we have developed our country and roaring to go and do these things to outside world. Maybe if we can create a panel of people, whose job would be only to assist the financial institutions, maybe assist the government of the countries to say, how can we make a bankable.
Sorry, did we lose Sanjeev? Okay. I think we've lost Sanjeev. Hopefully, we'll get him back. Sanjeev had some very positive experiences, as well as the other, which he said, how can Indian companies work with different entities on the ground to make projects more bankable because of getting the right techno-commercial experience. I think certainly a great point out there. I wanted to pick this one point.
Sorry, Darshan, sorry. Looks
No.
like I have a similar issue, but I just closed. Thank you so much. Darshan, go ahead.
Thank you, Sanjeev. I just want to pick very quickly, we have about 15 minutes, this talk about one continent, 54 countries. There's been a lot of talk about the African Continental Free Trade Area, and I hope we get a better acronym because the current one is very difficult, at least for me to pronounce, and its impact on unifying the African continent economically. In India, I can tell you, and I know, Sanjeev, I will disagree with you. We were one country in name, but until our goods and services tax regime came into being, we were effectively independent states, which made it very inefficient for Indian companies to do business pan-India. The change to GST was a huge boon to many areas of productivity, created phenomenal surge in logistics, trucking, warehousing, greater economies of scale in various markets. From an Africa perspective, how do you all see the impact of potentially free movement of goods, free movement of energy as these highways come about, renewables, natural gas, pharmaceuticals? How do you see the impact of the African Free Trade Agreement on this? Maybe Solomon, Sanjeev, one of you all can take this first. We'll bounce across to the other folk.
Okay, so maybe I'll jump in because we're really great supporters of the African Continental Free Trade Agreement. And Darshan, we've simplified it now. We just call it the Continental Free Trade Agreement, or the CFTA. So we've tried to simplify it because we all stumble. Part of the question I've been asking myself is what is different this time, because we've made attempts in the past with regional economic communities across Africa. We have EAC in East Africa, we have SADC in Southern Africa, we have ECOWAS, etc. And there have been relative levels of success. I think one of the things that's quite different now is countries are beginning to realize that the North-South relationships that have existed over years, creates trade on a fragmented basis. And until we start to really operate coincidentally as a 1.3 billion people bloc, which is about the same size of India, we are not going to be able to trade well with other continents, and we are missing the opportunity of trading amongst ourselves. Okay, so all the issues that you've talked about, harmonization of, customs unions, the ability to move, goods and people, across borders. These are the practical details that we're working on. We've also even funded the Continental Free Trade Agreement Secretariat, which is based in Accra. We've seen 30 governments, very quickly, ratify, this agreement. So we're seeing a greater take up. So there's an excitement about it. It's not without its challenges, but I have to say that it's not simply, to be a counterpart, but it's also to facilitate trade amongst ourselves. In other words, let's add value. Each country does not have to produce everything from an import substitution perspective. If we can produce pharmaceutical drugs in Senegal and have that really transported across, the Francophone regions, then maybe we can actually, attract a partner from India to joint venture with a local company. You don't have to register, each drug in each country, and we really have things harmonized. So the opportunity is great. It's not without its challenges, but for me, this is really the game changer going forward. And, likewise, the single African transport, air transport market will facilitate, the greater movement of people. This is the best time to implement it because, the airline industry has been decimated. But these are things that, as part of the recovery, we feel that there's greater political will. And the technocrats have to really come together and operationalize it. Thank you.
Thanks, Solomon. Steve, over to you. Yeah.
Yeah, I'll try and be short because obviously I'm mindful of the time. I think the Common Free Trade Agreement is obviously a great leap because it has captured the world's imagination for a change. Because as Solomon said, there has been similar trade agreements in the past, regionally and otherwise, which never captured anybody's imagination. So imagination capturing is the first step. But please understand that trade doesn't happen if there is nothing to trade, right? So African countries will have to start producing, and then we'll have to have the infrastructure to distribute it, right? Now, it sounds like a glib comment on my part, as if it's a criticism on African governments, but it's not. It's also a criticism on global trade policies. It's a criticism on some of the legacies that still exist, which discourages processing of basic goods in Africa. Just to give you a small example, between Ghana and Cote d'Ivoire, the two countries produce more than 70% of the world's cocoa, but it's less than 10% of the chocolate industry that they earn as revenues. And you can argue about lack of infrastructure, lack of skills, lack of power, lack of whatever. But one of the biggest issues is that even today, European Union charges a tariff on processed cocoa, right? So yes, Common Free Trade Agreement is an extremely important initiative. It has captured the imagination of everybody. Institutions like us see this as a great boost to our ecosystem strategy, the strategy that Solomon was explaining earlier. The ecosystem strategy works on a very simple principle, Darshan, that if you have a country which produces agricultural products, it has, say, some oil and gas, and it has some minerals, but it's all over the country. How do you create a logistics system so that those products can come near to the port, get processed, for which you build an SEZ, create jobs, therefore, and have a port to export it, and earn more revenue than you would by just exporting primary goods? So it's a win-win-win for everybody. That's the ecosystem strategy. And why is it a win-win-win? Where's the third win? The third win is you don't build infrastructure unless there's a demand. So this feeds off itself. So the infrastructure you build gets used. Quick point I'll make, and I'll shut up after that. please understand that funding in a relative sense is not a challenge in Africa today. The biggest contradiction we today have and face is that there is more dry powder waiting to invest in Africa than there are projects, which is why project development is important. And Sanjeev's point is relevant. He loves Africa. I'll tell you why he loves Africa. Because he makes money in Africa. Because nobody, the lowest project default rates in the entire world is the Middle East. Second lowest is Africa. So when we talk risk, we talk of perception. When we talk risk, we talk of project preparation and risk mitigation that can take away those risks. And that's why it is actually quite an emotive point for me when I hear people saying it's so complex. You have to engage. Shailesh will tell you that India's infrastructure didn't get built by not engaging. It got built by engaging. And foreign investors have to do the same. Thank you, Darshan.
Sanjeev, thanks a lot. Shailesh, I'll let you pick up from there, and then we may have to hand it back to the producer, but go ahead.
So 3 quick points, Darshan. One is, look, I grew up in an India which was much worse than what it is today. And that's why when I go to Addis Ababa, when I go to Casablanca, when I go to Lagos, and I have visited all 3, I feel at home. And this cannot be said about most Europeans and Americans who've grown up in a very different context. So we probably from India would appreciate the challenges, and having solved some of those challenges could help Africa do it easier than the Europeans and the Americans. So that's my first point. And on project development, look, we have a wealth of project development experience in India. And the Exim Bank in India is funding consultants to go and develop projects in Africa. We ourselves are beneficiaries of that. So that's the first point. The second is, I am in business. Ultimately, it's all about cash flow. So I will not reject or dispute anything. I will accept all points of view as long as I make money, Sanjeev, whether intellectually or pragmatically. I need to make money. And that's the fundamental point about the private sector.
Yes.
And therefore, these ideological debates I don't get into. If we have a national infrastructure pipeline of 7,000 projects in India, and right now they're ideas. For us as a company, converting those ideas into assets on the ground is what will make us our cash flow. So if you have the African Union and you have a 15-year implementation program, how do you convert that idea in that program into assets on the ground is the only thing that matters. And to that extent, I was so enthused in attending the African Development Bank annual meeting and the high fives, I still remember. And I thought the best was the gray matter infrastructure, which we should also start using in our country. My last point is that, look, it's not about 54 countries also. It is about the top 50 cities of Africa, because that is where your economic value is getting created. Most people in this CNBC program are located in the top 20 cities of Africa. So I'll tell you where we could improve. And I also wanted to say where we could learn from Africa. We could certainly learn the way African countries manage their wildlife tourism. Oh, that's so brilliant. We wish we could do even half of it. But where we need to focus in India, and we also need to focus in Africa, is that most infrastructure in the next 50 years in Africa, apart from pipelines and railway lines and highways and power transmission lines, are all going to be around cities. So how do we get cities better? A Lagos or a Cairo, Alexandria, or a Kinshasa, if it becomes more efficient, the entire country will benefit. And I have seen this happening in India when Indian cities become better. So a lot of our thinking now, look at smart world and communication, my last point. One of the ways that we have brought down crime in Indian cities is by installing a lot of CCTV cameras all over. And there's an Economist article that has clearly demonstrated the linkage between lower crime and eyes on the street. So we are happy to work with African cities on developing the same kind of intelligent control rooms and CCTV cameras to reduce crime. And look, without law and order, there is no other infrastructure. The most critical infrastructure is law and order. So we are happy to partner with African countries. Private sector companies usually put risk and return together. So the higher the risk, the higher the return we want. So I'll just leave it there. If an African country wants to have high-priced infrastructure with us charging higher return, you're most welcome. But don't learn the wrong lessons from India. We are happy to come in and work in any country in Africa against a cash contract. Thank you.
Thanks, Sailesh, for that. You know, and one thing I must find incredible, certainly any Indian who touches Africa in any way, whether as a tourist, whether as somebody who does business, or somebody who goes there to live or who's immigrated there, loves and certainly feels passion about Africa. Okay, and I think, and certainly, I think the people on this panel are all using their energies towards developing Africa in the right manner. I certainly remain optimistic that the Indo-African future will be an incredible one in which India and Africa will both be contributors as well as beneficiaries in each other's phenomenal success ahead. Gentlemen, thank you so much. We're unfortunately out of time, and I have to hand it back to Godfrey. Thank you.
Thank you.
Thank you. Thank you.
Thank you very much, gentlemen. As I said yesterday, one of the things about these virtual conferences is that we miss the applause. So take it from me, people, wherever they are who are watching, are giving you applause for joining us today and for giving us your insights. Thank you very much, Dashan, for that well-handled debate. Of course, the conversation around infrastructure on the continent is a complicated one where, you know, when you try to suggest that some of our pension capital ought to be deployed there, you open a hornet's nest, in some cases with good cause, in some cases perhaps people misdirecting it. But I really liked one of the points that was made by one of you guys around the fact that the lowest default rates in the world, the second lowest, sit on the African continent. Thank you for bringing it up. We need to de-risk Africa.
What's happening now is that, you know, data is becoming more, the real value, and like, you know, data is a real asset, and who owns that data and who controls that data, you know, creates value. And you see this reflected in the stock markets in terms of which companies are doing well. It's those companies that are generating data, and data which can be translated, and data which can be analyzed to customize provision of services to individuals, to companies, to countries, and that can then be used as a basis of making investment. With the coming of 5G, the preponderance of data and its applicability is going to go through the roof, and people, there are various theories as to what will happen with 5G. Can passwords exist in a 5G world, or can computers with brute force break any password? So the future of the bank is the network of data connected to value.
The South Africa Investment Conference creates a platform to discuss investment opportunities. In the face of a challenging economy as a result of COVID-19, how will South Africa move towards an improved investment environment? Dr. Petros de Kock, General Manager, Research at Brand South Africa, joins CNBC Africa to unpack this and more.
We are looking at getting the message out there, think differently about South Africa and its due strategic role in the African environment.
Monday, 16 November at 12:30 p.m. Central African Time. It's been a great 3 days of discussions, sharing ideas, hearing some insights, and trying to find ways that connect the Indian subcontinent and the African continent. This will be the last of the sessions that we've had over the past 3 days, where we are examining opportunities for collaboration in digital and communications. Now, we know about the African telecommunications opportunity, and we're going to get figures on that, because we all know that Africa has the lowest mobile penetration rates in the world. And we also know that India has one of the largest telecommunications industries in the world. How do we connect the two? Opportunity to resource. That will be part of the discussion that we are going to have this afternoon. I wanted to remind you, about 10 years ago, a friend of mine was chatting, and he reminded me that about 10 years ago, the most valuable companies in the world, probably you would have counted the resources companies. So your Exxon's Mobils and your Anglo-Americans, BHP, etc., etc. Today, who are those companies? It's the FANGs. And I think all of us know who they are. And need I say it, here on the JSE in South Africa, which is the most valuable company in the world? The answer to that question, I will put it to Putima Anyele. Right, let me begin first of all by giving you a little background that summarizes some of the key issues and opportunities between Africa and India in the telecommunications space.
India's telecoms industry is one of the biggest in the world and has maximum reach across the subcontinent. It ranks as the world's second largest market in terms of internet users, and it also boasts the second largest telecommunications market. FDI inflow into the telecom sector during April 2000 to March 2020 totaled $37.27 billion, according to the Department for Promotion of Industry and Internal Trade. In Africa, it is expected that there will be more than 1 billion mobile broadband connections on the continent by 2024. Service providers report strong growth in revenue from data access and digital services such as mobile money. And investment is surging in Africa's tech startups. Mobile broadband and financial services are key growth segments. This panel will explore the potential opportunities for collaboration in this sector between India and Africa.
And helping us to find some answers and ways in which we can increase that collaboration between India and Africa today are Manoj Kanodia, CEO, Inspira Enterprise. Tanoy Chakrabarti, Group Government Affairs Officer, Tata Sons Private Limited. Alan Nott-Craig, founder of Project Isizwe and Herotel. Phuthi Mahanyele-Dabengwa, CEO, South Africa, Naspers. Gentlemen and ladies, thank you for joining us this afternoon and a very warm welcome. So Phuthi, jokingly, I was asking which is the most valuable company on the JSE, and of course you know the answer to that. But I wanted at the outset to get from you to give us, if you like, a scene setter in terms of the opportunity for telecommunications and digital within the African continent, so that the gentlemen in India who are sitting there in one of the largest telecommunications markets in the world may actually realize that there might be a bigger opportunity away from home.
Thank you very much, Godfrey. It's really good to be here, and greetings to all my fellow panelists. Today, digitized world. Through our business, which is listed in the Netherlands, Prosus, we focus on building global consumer internet businesses. The adoption of digital technologies and enabling employee and customer collaboration and interaction has been accelerated by the COVID-19 pandemic. This question is how this evolution will impact the next new normal in terms of how consumers use technology and the impact that this will have on behavior and habits. Take one of the core business segments, food delivery. As Naspers, the strong local network effect of online food delivery fits well with our strengths and strategy of partnering with local entrepreneurs, especially in the BRICS nations who understand their markets. Prosus, which is a global consumer internet group of Naspers, has a 40.02% stake in Swiggy, India's largest food delivery platform. Since our initial investment in 2017, Swiggy has grown rapidly. Its supply base is more than 160,000 restaurants and leverages the network of 240,000 couriers. Opportunities across the world, and especially in the BRICS nations, for technology to improve people's lives every day are there. Look at the payments business that we are invested in India. Massive structural shift to digital payments have resulted in businesses such as PayU playing a significant portion within the Indian economy. Our payment platform PayU served to increase conversion rates for enterprise merchants. We've also invested heavily in Meesho, which is India's largest social commerce platform, which enables individuals to start an online business with zero investment. Our ability to enter new segments such as merchant payments, supporting small to medium-sized enterprises, which is key in India, has been the main drivers of this inclusive growth and financial inclusion for many. Important that this is done in a responsible manner. We must also recognize the current global volatility required so that we can ensure that BRICS nations can strengthen their collaboration in recovering from COVID-induced economic recessions. And so when we look at opportunities here on the African continent, they are vast. We have a fund called the Foundry, and through the Foundry, we invest in South African internet-based businesses. And so there are significant opportunities to invest in local South African, as well as African. If you go to East Africa or you're in West Africa in Nigeria, you will see great opportunities in the internet space to invest in. And I think when you look at the fact that these are all, internet-based businesses, the opportunity for growth is significant. And particularly when you're looking at economies of the African continent and the Indian economy combined. And so we look forward to being able to continue with our businesses in India, as well as our businesses here on the African continent. And we welcome our Indian business people being able to do more business on the African continent. Thank you.
Thank you, Phuthi. I like your use of the word vast in referring to the opportunities for collaboration and for business on the African continent. The question then becomes, why are we not seeing a wall of money chasing those opportunities? That conversation is coming up next, but I want to get the opening thoughts from our other participants. Can I come to you, Mr. Chakrabarti?
Thank you very much, Godfrey, for the opportunity. And I want to thank Indian Merchant Chambers in Bombay, as well as CNBC Africa, to put this together. I think the last 2.5 days has seen some tremendously exciting exchanges and, a lot of knowledge sharing that has happened in terms of the opportunities to collaborate between India and Africa. As Puti was mentioning very correctly, the opportunity is there for Africa to skip a few steps, in fact, even faster, because of the collated learnings from the experiences of having created a technological platform in fairly complex environment and a heterogeneous environment such as India. I think that is really the opportunity for Africa to be able to imbibe from the learnings and the been there, done that experience that we bring to the table. And I speak from experience of having been involved with digitally transforming the revenue and tax systems for 4 African countries, Zambia, Rwanda, Kenya, and Uganda. And in all those visits, I clearly saw the opportunity of the skipping of the static computing phase of technology transformation, of whether it is citizen services from government, whether it is the area of banking, whether it is in the area of socially transformative programs such as land records and many others, municipal transformation of municipal services. All of these are learnings that we can actually take from India, having been there, done that in very difficult terrain and complex situations, and take that learning to be able to compress the timeline and also predict a tangible, measurable outcome of what is it that you can achieve in the before, after of every program. So I think that is the opportunity for collaboration, is that the fact that in India now we have, let's say, for example, a very active and thriving a banking network even for people below the poverty line. How did we achieve that? How did we achieve transfer of social benefits directly to the transferee, which is namely the citizen, because not going through layers and ultimately it getting usurped by people in between, and the real benefits of that social grant not really reaching the people that it is intended for. How do we cut all these? How do we disintermediate government? How do we make sure that using technology, you don't have to visit a government office anymore to get a government service? Yeah. How, therefore, you disintermediate measures of corruption, petty corruption that actually happens in the physical interface between the citizen and the government official. These are learnings that I think has value that we can bring, and I clearly see an opportunity for all the 54 countries to be able to avail some of these experiences that we bring collectively from India. And I clearly see a tremendous pipeline developing of collaboration between the local and global